Good evening, everybody. What's going on? A lot of people here. PB, what's going on? Lena, what's going on? Chris should be here in a few minutes. Let's get the disclaimer out of the way. Remember, we just do a lot of research. These are our own opinions. We have no idea what your situation is. Please take everything we say with a grain of salt. And do your due diligence. Ray's here. What's going on? Give me one moment, everybody. We got a lot to go over tonight. Michelle, what's going on? June, what's going on? A lot of people getting happy about VG. Looks like natural gas, especially liquefied natural gas, is in play. VG was up almost 18% today. You know, war's not good. Military action is never good. But you know what? We got to talk about certain things. And there could be a crunch on oil. I mean, I thought oil would be up way more today. It's interesting that it wasn't. And I'm a little surprised that a Saudi Aramco refinery got struck. I thought that we would have seen a much different market today. And the futures are getting hit. But we saw a big reversal today. Yes, I did get a haircut. It was getting scruffy. A lot of people complaining how to get a haircut. Yeah, VG did not fall too much at all. And U.S. pump prices crossed $3 today on the aggregate. Gold is still above 5,300. I mean, you got PB trying to make me laugh. Do you feel lightheaded? Little bit. Not going to lie, little bit. A lot of people are probably happy about the SoFi news. Senor Noto purchasing $1 million worth of shares. Seems like Tanner's becoming an oracle or a prophet of some sorts, considering the video he made. So he did predict it to some degree. Who knows? Who knows why futures are down right now? I mean, the more important question is, did we find some type of a floor? We saw a lot of people come in on tech today. Companies such as Meta, Microsoft, and NVIDIA turned. Thank you, everybody, for the super chats. Nick, thank you. Matthew, thank you very much. How long do you think Iran will be able to block the Strait of Hormuz? I mean, I have no idea how long it is going to be impacted for. I do not think it will be blocked by weekend. The reality is there's too much oil that flows through there, and it impacts too many countries. And with Iran in the condition that they are, I don't think that they can block it for too long. I really don't. Now, I could be wrong. I'm not a political pundit, not a political analyst. I'm just thinking about the amount of money that this is going to take off the table for some of the Middle Eastern countries. It's not in anybody's best interest for the strait to be closed. I think it'll be open soon. We got to see. To me, the big thing is crude is at 71.65. A lot of people were saying 80. A lot of people were even saying they wouldn't be surprised if it got to 90. We didn't see that happen. In fact, on the one day, we saw crude retrace back to 70. So I don't know. But I think this is going to be over sooner than later. I really do. Now, technology is really interesting because we saw a rebound in tech. I don't know. NVIDIA is really interesting here. It got past 180 to 182. You got Microsoft trying to break out above 400 again. And it looks like the tech buyers are coming in. And all eyes are going to be on Broadcom and Oracle. I think that we are in a position where, my own opinion, I don't know that tech goes much lower. When I look at how these companies are being valued, I think there's a backstop to this. And I think today is a perfect day. I mean, we were down hard in the beginning of the day. We were selling off, and then buyers stepped in. I don't think that we would have seen that if we weren't close to a bottom. I actually think that's pretty bullish, especially when everything in the Middle East gets resolved. What happens? Think about this. Are you willing to take short-term pain for a week or two? Hopefully it's a week or two, okay? And volatility for a week or two to get a stronger Iran, an Iran that is more of a peaceful Iran, hopefully, and a better macroeconomic economy with less geopolitical tensions. I mean, I'm willing to suffer through volatility for that. And if we get that, think about what type of rally that could spark. And then we got tax season coming around. We got people that could be getting checks back. I think the market's going to find a lot of capital coming into it. And I just don't know how much lower tech can go. The market punished NVIDIA off of earnings. I think we've seen a bottom in NVIDIA. Obviously, you could still go lower, but bouncing off today, I think people started buying because it was inexpensive. Same with Microsoft. I mean, Microsoft took a big swing today. Same with Meta. Oracle's moving a little bit. Palantir, defensive company, obviously, that was an easy one to read for today. But you know what? Companies like Zeta, who had great earnings, up today. Happy about that. Nebius is interesting because they're still, it was down for the day. I'm a little surprised at that. CoreWeave down today. And CoreWeave is at under 80. I got to start looking at that again. Then we started getting crypto to turn a little bit. PB, thank you very much. I like QXO long term. I really do. You got to think rates are coming down. And if rates come down, you got to think that we will see the home builders building more. QXO is a perfect setup for that. They are going to be acquiring more companies. And you know what? Matt Money is lurking. He's in the chat. The White House Quant is in the chat. All right, let's see. Where did QXO go today? QXO went 22.92 today. All right, listen, that's still not bad. That's significantly higher from where a lot of people got in. So I'll take that. Matt, who disrespected the Enzo Ferrari? Chris, what's going on? Cannot hear you.
Sorry about that. So I went to shower and I was like, oh, I've got enough time to shower and shave, but I thought it was at 9:30. So my bad. So my wife's like, I think it's not. So I was like, can you check for me? And I didn't get to shave. So you guys can see I'm actually an older gentleman. My whites, look at that. See? I'm not the young cat that a lot of people think.
Chris, throw us on your X.
Nah, it's fine, man.
So I got breaking news for you.
By all means.
My real ID came in the mail.
Congratulations. They're going to let you fly now.
I'm allowed to get on a plane.
You want to know something funny? I have to get my real ID because I have my driver's license from New York that I still haven't switched over to Georgia. And it wasn't a real ID. So I was like, whatever, I'll do it whenever I get a chance to. So the last few times I flew, I actually just took my passport, which is fine. But now my passport's going to expire in a few months. So I have to do both. So yeah, good times.
Good times. Yeah, it was pretty easy. The application's really short and it took 2 weeks to get here in the mail. So I
Okay.
have an official real ID. I'm going to get a passport. I'm going
Congratulations.
to be official. And when I get it in the mail, I will show you to prove that I am a citizen.
Of Mexico? What is
Listen,
it?
you know what I told my wife today?
What?
It's like maybe we should buy some real estate in Mexico. I bet we could get for like 40 cents on the dollar.
Yeah, if you can get out of Mexico, shit. No,
Who
it's
said
not.
I have to go into Mexico? Why can't I just buy property there?
That's how you get ripped off, dude. You're gonna get sold a timeshare that you'll never use. Be like, "See, senor, your house is right here," and they'll send you pictures that are AI generated.
Seriously.
All
So,
right.
all right, we have a lot to go over. Oil not up nearly as much as I thought it would be. I thought the market would close down today. It didn't. What do you think is going to happen with the Strait? How long do you think it's going to be blocked for? What are your initial thoughts on that?
So, from what I've been hearing from the Trump administration, they have a pretty robust timeline in place by which they expect this to all be done. So while they are being a very heavy-handed right now, there's sort of a timeline, and I think that's what the market is already kind of front running. I mean, at the end of the day, Trump said that he doesn't want to get into these endless war situations, and I don't think that he's going to be in a position where he wants to do that. And so right now they've literally decapitated the head in Iran. A lot of the stuff that Iran, like, with the missiles and everything else, they're doing that as a show of force to basically say that, oh, look, we're still in charge and we're still under control. I don't know how long that necessarily is going to last. Scott Bessent actually came out and said, basically that they've been monitoring the money flow out of Iran and into, some of these global bank accounts and stuff. And so it's almost like the rats are fleeing the ship. So I don't know, maybe this gets resolved sooner than most people think. And if that happens, then the markets are just going to say, oh, look, the Strait of Hormuz thing is out of the way, So yeah, that's about it. And I think at this point, the Iranians made a very bad miscalculation in that they started to attack civilian centers in the outlying countries in the Gulf. And so now what could have been a sympathetic intermediary that could have mediated some sort of peace, they've sort of just said, no, this is done. Like, we're not playing this game anymore. I think in terms of global war on, terror, this will be a big, big hit to the global war on terror. And I'll tell you the reason why. In Iraq, if you look, like, one of the reasons why the US took so many casualties is because where was all the weapons and funding coming from, especially in Sadr City? Like, remember, Iraq was a Shia majority country, but they were all those militias, they were all being funded by Iran. And the thing is, no one had the courage to take on Iran. Now the head's pretty much been they decapitated it. So now the question is, where's Hezbollah, where's Hamas, where are they going to get their funding from? And I think without funding, they're still going to have some level of political will to carry out attacks here and there, but it's not going to be the wholesale level what is it called, commitment that was out there. So hopefully we see a middle peace in the Middle East sort of a situation. So we'll see what happens. But the point is, I think at this point we would hope that this is a quick resolution where some level of democracy comes back to Iran, and they ended up getting a legislature together. The reforms take place that, the country wants and deserves and all that good stuff. But as of right now, the IRGC is still in relative control, but I think that control is like loosening by the day. And I don't think that they have the willpower to go beyond maybe a few more weeks, after which they'll pretty much be done. So we'll see what happens.
Yeah, I was surprised that refinery in Saudi Arabia got hit. I'm surprised that there was some collateral damage in neighboring nations. So, well, yeah, we'll see. I don't think this lasts more than this week, but I could be wrong. I mean, maybe it goes 2 weeks. I just don't think the strait's going to be blocked off for too long. And I am not in the camp that oil is going to 100. I don't think it's going to 90. I did think it was going to go to 80. Hopefully it doesn't in the short term. But if this is only short term, my hope is all of this is solved in the next couple of weeks. That way it's not going into Q2. The big fear that I had was this spilling over into Q2 and being a long-lasting thing. Because if we had higher oil prices, that could definitely impact CPI and input costs for manufacturing. But
Yeah,
I don't know if we're going to get there, which would be very good.
Yeah, Robert Musil, he actually said the right thing. The biggest problem is that China also wants to open the strait. Yeah, because the thing is, like, China's energy dependent, and China's been one of the biggest suppliers to Iran. So basically, you're sort of in this catch-22 where by trying to hurt the world, you're essentially hurting the biggest clients of the Gulf states when it comes to their energy, which is China, which is also your biggest supplier of military hardware. And so it's sort of a weird situation that the Iranians find themselves in. But the point is, if the history serves correctly with the Trump administration, they're not trying to do these regime change wars, in that they don't want to go in there and try to physically run the country. And if you were to ask me, like, what are key mistakes in Afghanistan and Iraq were, from my perspective as someone who served, I think we could have gone in there, wiped out every terrorist that we wanted to, and then just left. And that's it. Let the power vacuum solve itself out. And if another head came around, whack that head, and basically just play a game of whack-a-mole until they sort themselves out. And that's it, because that's the only thing you can do. Now, Iraq sort of worked out correctly in that you had this democratic elected government eventually come into power, right? In which case, right now, there's actually some semblance of democracy. Afghanistan is completely reverted back to the Taliban. But to be honest with you, man, these people have been living like this forever. Right. And until they solve their own issue, we're not going to be here to fix their stuff. Like, and this is something I actually was talking to Matt about. I said, any country on this planet, we have come to the point where even if the people in charge are doing the right things and saying the right things and making sure everything is okay, if they don't have your skin tone, they don't have your cultural background, they're not racially conscious to you, you feel like they're colonizers and invaders and all this other shit, even if they have good ideas and they try to do right by you and all the other stuff, because there's just this feeling of the other. So one of the things is that by going into Afghanistan and then giving them money and doing all this stuff, everyone, like all the local people, even though in my honest belief, the US was trying to do good in Afghanistan, trying to promote peace and women's rights and all this other stuff, because we weren't Afghani, automatically there was a good segment of the population that was like, these guys are invaders. I mean, it's almost like, imagine right now another country coming into the US and saying, like, we're going to make things better. Do you really trust them to make things better? Or you're going to be like, yeah, let me go pick up my gun and take a shot at this motherfucker?
So where do you think this makes the markets go? I mean, we saw a big reversal around lunchtime. We saw, from what I think, a lot of people stepping in and backstopping tech to a degree. I saw some of the tweets you put out today. I still call them tweets, not posts. And I agree with a bunch of stuff that you said. So did you buy anything today?
I didn't. I bought everything a few days ago. I took a position in Adobe. I took a bigger, I bought on Friday. I bought NVIDIA, which, people laughed at me a little bit, but it was okay. I don't care. Adobe is another one. I have a position in PayPal, which has been doing well. My Venture Global has been, like I said, I bought the dip.
Yeah, I think that we have I think tech is getting backstopped right now, and I want to say that a bottom is, and I hate calling these things, but I really feel like with the reversal today, tech is so cheap that tech now looks like value, whereas staples in other sectors look more like growth. And I think that we could see a rotation over the next couple of weeks back into tech.
Don't
And
say that. No, 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 no. Hold on, hold on,
oh
hold on.
yeah,
I'm gonna stop you there. We need to stop saying tech. Software is not the same as hardware and everything else. Hardware's been doing well, right? So we can't say tech anymore. We have to be very clear.
all right.
Let's just say SaaS. There you go.
So how about this? Hyperscalers and SaaS.
There you go. I like that. That's
Is
a
that
much better. Yes,
Okay.
much better.
Because I don't think hardware is going to run. I mean, networking like Cisco, Arista Networks. I don't think that that's going to run. I think that'll just be a gradual staircase that's much slower. But I do think that SaaS is going to rebound. I do think that the hyperscalers are going to rebound. I have not seen the hyperscalers this cheap in a very long time. And I got to tell you, the more I look at Amazon, the more I am interested in acquiring more. And I'm probably buying more this week.
I've been buying, so I'm with you, man. I'm with you. The reason, by the way, I'm sorry. I'm sorry I interrupted you. I just, like I said, I wanted to clarify because I've been talking to people and they're just like, man, tech is dead. And I'm like, Micron is up like 400% over the last like 3 months. Like, relax. Like every one of these other like chip makers and proxies, they've been killing it. So this whole notion that people just lob everything into, oh, that's just tech. Like, I think we have to be very strategic in the way that we classify this, because there is some portion of tech that should have weakness over a long period of time. And then there's other tech that's not, right? And the only way we can honestly give a good opinion is by being more granular. So here's an example. I am a believer that cybersecurity is not going to get disrupted by AI. If anything, cybersecurity is going to be more important in the world of AI, because now you can have all these bot farms doing DDoS attacks, all sorts of spear phishing attacks, and all of this could be driven by AI. And literally, AI can analyze code for vulnerabilities, all this stuff. So I think AI. I think instead of saying even SaaS, we should be pretty granular in saying that, hey, even among software as a service, there's components of it that are oversold that are going to do well. Cybersecurity is one. Yeah, and some of the other ones will do well too. So go ahead. Sorry about that.
I got one cybersecurity name that people don't think about a lot. It's not CrowdStrike. I do think CrowdStrike is going to rebound. Palo Alto is one that I have been really looking into lately, and it's getting more and more interesting. I think we see even further consolidation in cybersecurity. And cybersecurity is one of those aspects, and you hit the nail on the head. They're going to be one of the true beneficiaries of AI. It's only going to make their platforms better as these cyber threats get more intelligent and more impactful. And companies are going to keep expanding their budgets on cybersecurity. So there is, to me, alpha to be unlocked in that area over the next several years. So yeah, I am with you. The three that I really like here for pure plays are CrowdStrike, Palo Alto. I don't know if you can consider Fortinet a pure play only because they're hardware. I do think Fortinet could get acquired. I think an Arista Networks could try to acquire them, and I never make an investment because they could get acquired. But their software that they are building to work unilaterally with their hardware is super interesting, and they have really diversified their revenue stream away from being 100% reliant on networking hardware. So they have that reoccurring revenue coming in the way that Cisco does with their platforms like Cisco Umbrella and the different Meraki applications that they have.
Yeah. Networking, security, all that stuff it's not going anywhere. But I'll tell you now, among all of the cybersecurity names, I think CrowdStrike is the one that you want to bet on. That's like in my opinion, that's like the Microsoft of cybersecurity. Like, it's the most blue chip, and you'd be surprised, but it's only $96 billion, which I know it's like only $96 billion, but trust me, like, that's cheap considering where everything else is, and literally the growth levels that that CrowdStrike has. So, the three main ones that you want to look at when it comes to this is CrowdStrike, Palo Alto, and Fortinet. Fortinet's about 60 billion. What is it? Palo Alto's 122, and CrowdStrike is about 90 something. There are some other ones like Sentinel One, which is smaller, and Zscaler is another one to look at also. But once again, that's something that and Rubrik. I have to talk to Sam. Sam had a pretty decent position in Rubrik. I have to see if he's still bullish on it. But yeah, Rubrik was another one to look at. And Rubrik, what it does is, I'm not the expert on cybersecurity, by the way. I'm not the SaaS guy like that Sam is. So if you want to tune in and ask Sam questions about cybersecurity, you'll probably get the best answers about where to look for cybersecurity investment. And Rubrik is about $10 billion. It just IPO'd not too long ago. Yeah, in 2024. It IPO'd at about $38. Right now it's about 51, 52. They beat their last earnings by about 160%. Their revenue growth rate was about 50%. So it's a pretty, yeah, exactly. I had 545, 607. He knows. So yeah, I mean, like I said, there's companies out there that, in my opinion, are way oversold in the SaaS world. And so if you're looking for great deals, and if you're looking for a specific sector that I am pretty confident that cannot be one-shotted by an AI agent, it's cybersecurity.
So in addition to Adobe, is there anything else you're interested in SaaS that you think is oversold that doesn't deserve to be?
ServiceNow. I mean, what's his name? Just bought Bill McDermott. Yeah, he just bought a bunch of shares in the open market, man. So wow. I mean, dude, your CEO is buying. That's a pretty good indicator of he's confident in his ability to get the job done. So I think some of these guys have been way oversold, and I think it's if you're good, you could probably pick them up right now.
Yeah, I started a position in ServiceNow. I still have it. I'm on the fence if I'm going to buy more or not. We'll see. But I do think ServiceNow is an incredible company. I think McDermott is hitting the nail on the head with authorizing $5 billion in buybacks and just deploying $2 billion off the jump. So that's a company that is only going to improve. And I think that I was talking to somebody in IT today, big guy in IT, and he said, yeah, the idea that these companies are not going to get better and improve value for their customers rather than AI overtaking them is insane. And I've agreed with that for a while. And the one SaaS that we haven't talked about yet tonight, Salesforce, I went over the numbers again today. I think it's super undervalued. It's a hated name. Maybe the market doesn't let it rebound. Maybe there aren't going to be as many buyers as one would hope. But you know what? That's one that the numbers just don't make sense. So I'm going to still add to it.
There's one company that I'm researching right now that you're going to be shocked. But I think it's actually a pretty good buy right now. Have you heard of this company called Zoom?
Okay. Please don't drag me down this rabbit hole, but I'll entertain it. Let's go down the rabbit hole. Tell me your thesis, please.
Okay. So number one, Zoom, even though it doesn't look like it, they have a pretty sturdy business, right? And in terms of valuations, they're trading at a really good valuation right now, considering if you look at their revenues, even their projected revenues, they're actually starting to reaccelerate some of their revenue growth, which is not something that you would be like, oh my God, like I can't believe they're re-accelerating their revenue, but they're re-accelerating their revenue slightly. Let me actually share my screen and I'll show you guys.
Yep.
Their guidance was very poor this last this quarter, so the market definitely like took them down for a little bit. But if you look at their revenues, right, revenues are pretty stable. So right here, revenues are stable and growing. So it's not like this is a business that's going away anytime soon. The businesses, like especially their enterprise clients that use them, they love the product. They're not going anywhere. If you look at the RPO right here for these guys, their RPO, let me just right here. Look at the remaining performance obligations.
Yeah.
Remaining performance obligations have been growing, right? So if you're a business, especially in the SaaS world, and you're losing market share and you're losing money, you would see this remaining performance obligation go in the other direction. This is a profitable company, generates significant cash flows. And one of the things about their cash flows is they're starting, they've been buying back their shares, but they're a lot more, what is it called? A lot more conservative with their share buybacks. So you can see here last year, they bought back about 1.8 billion shares, right? And if you look at their SBC, their share-based compensation has actually been on the decline. So, more of their shares, the impact of this reduction in share-based compensation plus the additional buybacks should create like a nice little floor for these guys going forward. And then on top of it, you're looking at no debt. How much cash do you think they have on the balance sheet?
$3 billion. I haven't looked.
8 billion.
Yeah.
7.8 billion in cash.
So have you looked at what they're making a push into?
Wait. Before you go there. So you would think like, 8 billion is a lot, right? Especially for a market cap of 20 billion, no debt. That means that 8 billion is cash? The hell, right? And then they have an investment in Anthropic, which right now is guided to Wedbush is saying it's about $4 to $5 billion that they have a stake in Anthropic that they bought at a very early stage.
Whoa. I'm looking at the balance sheet. Their long-term investments only say 1.6 billion. So you're telling me that's incorrect, the long-term investments? That it's really billion?
Yeah, because it's the short-term investments that are short-term securities. Remember the treasuries?
Yeah, no, they have short-term investments of 6.54, which is treasuries, and then they have another 1.58 billion in long-term investments, which is where I would believe Anthropic sits.
Right, but they're not fully recording it yet because remember everything is mark to market, right? They did take a like in their net income statement the gain on that asset. They did record it. Let me see.
I mean, what do they have? 35% of the company in straight cash, almost 40%.
Yeah,
with no debt.
No debt. Generates about $350 million a year in just income from interest on that cash, and it generates $2 billion right here. They generate on an EBITDA basis. They generate roughly, last year they did about 1.26. Next year they're going to do about 2. So they're looking at about 2 billion in EBITDA with no debt on the balance sheet, and that other money is in cash. And if you look at their cash flow statements, right? Look at their ops cash.
Yeah, I saw it. They're doing like 180 a year in free cash flow.
So if they're successfully able to do close to 1.8 to $2 billion in share reduction every year, plus they've got that Anthropic stake, this thing could easily jump back up to the hundreds. And basically that's what happened. If you look at the stock price on this thing, it was trading at 100 before that got poor guidance. And then it came down to 72. So it lost almost like 25%. So now, even on a technical setting, let me just go to my technicals. Sorry, just give me 1 second to load up my
application. So I'm going to give you, what can I say? What can I say? Okay. This is how I'm going to phrase this.
Mm-hmm.
Zoom is making a play in the phones, not hardwire.
Enterprise phones. Enterprise phones.
They're
Yeah.
making a
VoIP.
play
Yeah.
into VoIP, which stands for voice over IP. That's
Yep.
your handset. That is, oh, Dookie Pie's here. What's going on, Dookie Pie? That is their handset for business enterprises, Chris said. Now, they're trying to make a big play into that. My opinion, and I don't follow Zoom, I looked at it very closely maybe 6 or 8 months ago,
Mm-hmm.
is they're really going into that to augment the slow growth or minimal growth or no growth, whatever you want to call it, in the actual Zoom platform. Microsoft Teams has really become a de facto of a lot of businesses. Now, I do know but a lot of businesses have both. Some will tell you Zoom is better for very large groups,
Mm-hmm.
whereas Teams becomes a de facto because when you make a meeting in Outlook, it automatically has the button. Or if you're in Teams and you automatically make a meeting, it automatically has the button. It just automatically prompts to it. Teams is also part of every enterprise structure that has Office 365 on an E1, E3, E5, E7 license.
Yeah.
The downside to Zoom is Teams is everywhere. The upside to Zoom is nobody expects them to do anything. And if moving into phones sparks any movement, this company is very cheap. And you could see people don't look at it like this, and I don't invest anything because of a possible acquisition. Cisco owns WebEx. Cisco is getting into phones. This is a very small market cap that could be an acquisition for somebody like Cisco to merge all of that together and have more pricing power and gain market share. So that could happen. Zoom's a value play at this point. The numbers are amazing from a value perspective. Question is this a PayPal where the market just is not going to care about the buybacks? I don't know.
Well, to me, when I look at this thing, it was having a nice moment from April lows in 2020. It really was on an upward trend. I mean, you look at this last year, right? This thing was about $60. It got to about 95. That's almost a 50% return. So, like I said, if the product was not good, you wouldn't see that RPO go up, right, over time. And the thing is, the clients that use it love it. There's a lot of businesses. I think that the key here is we think of the SaaS applications as it's a winner take all thing. And I don't think that that's the case. I don't know if a lot of times it's a winner take all situation. There are a lot of companies. Here's an example. I pay Zoom. Okay. I actually have a Zoom subscription.
Same
Why?
here.
Because
I have a Zoom account for our
right.
build. Yeah.
Right. Now, the reason why I have it is because I have meetings with some of my Patreon people, and I want to contact them and they want to contact me. So I have a scheduling software that people can just go on. It's integrated with Zoom where they can just pick an appointment time and I can click on it, I can go, can Zoom, and it's a quick thing. It's an easy thing. So I'm paying them, right? It's not a very expensive thing to me. It's it's fine.
Like a book 30 or something for the year, something like that.
Right. You have it. Right.
Yeah.
So the thing is, we're customers of it. I'm sure that if you looked at people in the chat, especially if
I have a poll going right now. What do you use for work, Zoom or Teams?
Yeah. And so the thing is,
come on, everybody. Sorry, Chris. We have a lot of people here and only 43 of you voted. Come on. I know you guys are using one of these two.
Yeah. The key is, even if they're able to carve out a very small niche for themselves and they're very disciplined on their capital allocations, they continuously improve their platform. I think they're fine. They're going to do well over time, especially from a shareholder perspective. I mean, look, dude, I am not saying Zoom is like the growth company at this point. You are not expecting this company to 5x on you. But in terms of technical setups where this thing is way oversold below its 200-day, right? The fundamentals are fine. think this has a potential to get back to the hundreds.
I apologize, everybody. I realized I did not put Google Meet or WebEx in. My bad. We have restarted the poll because I saw a bunch of people saying, what about Google Meet? So we got all 4 in now. Let's see how many people answer. And I'm interested in the stats. Chris, I do agree that this could have another moment. The financials look amazing. And maybe Zoom tries to get into another business line. The question is, from a communication side, what else could they get into?
Well, that's the thing. These are the things that the organization is going to have to figure out. I mean, they do have some growth vectors in the phones and everything else. They've got like 4 million active customers that are utilizing that phone. That's why you're seeing that RPO number go up, right?
Yeah.
If they were a dying business with no growth, nothing, then I'd be the first one to say, hey, don't touch it, because they're probably going to eventually die. And if they had debt on the balance sheet, that's another reason why I would say, hey, listen, this thing could probably die, right? But I'm a CPA. I had Zoom Pro account for the last 3 years, 3 weeks. I switched to Microsoft 365 and Teams for myself and 3 employees. I'll never go back to Zoom. That's fine. You know, love Zoom, hate Teams. I personally hate Teams. Okay. I'm a WebEx guy. Like my organization, we use WebEx. I love WebEx. I can't get enough of WebEx. And what's funny is Zoom, WebEx was actually created and sold to Cisco by the same founder that created Zoom.
Yep.
You know, Teams is awful. I hate Teams, by the way. Like,
am I like the only person that loves Teams?
Yeah, I hate Teams.
I love Teams. It is awesome. I don't talk to anybody. I just send them an instant message on Teams. They can send me my docs and everything. I can send them docs. It's freaking great. I can call people from it. I can video call or audio. I love it. I think it's great. I do like Zoom also. I think Zoom, from a consumer standpoint, is better than Teams. Just for what you would use it for outside of work. Enterprise, I happen to like Teams. It's probably because I use it every day. I'm a little biased toward it, and I'll fully admit that.
Yeah.
All right, we got 173 votes. I'm going to give this one more minute, and then we're going to show the results. So get your votes in, everyone.
I didn't think that like I was going to bring up the most controversial topic today was going to be, hey, do you think Zoom is a good company to invest
Dude, it's such a controversial topic. People hate Teams.
I hate Teams too, bro. Anytime I get a meeting invite from like a third, like we use WebEx for our internal like conversations, our internal meetings, our internal things. But our third parties, they'll send me a link that's a Zoom, that's a Teams link. And I dread going on that thing. I'm just like, no, please don't make me go on there.
All right. So we had the results, 207 votes. Okay. 57% Teams, 27% Zoom, 11% Google Meet, 5% WebEx. For what do you use at work?
Yeah, I'm forced to use WebEx at work, so I can't change that. But I personally use Zoom for my personal like meetings and stuff. And I think a lot of the freelancers and especially smaller creators and stuff like that I've spoken to, they all use Zoom. Anytime we've gone on together, like outside of this thing, it's always Zoom. Yeah,
because it's easier just to send a Zoom invite than a Teams invite for some reason. I don't know why, it just is.
Yeah.
Outside of, and I think this is why I don't use Teams in my personal life. So I don't have it up on my computer. So when I go to Outlook, I automatically click the Zoom button because I put the extension in my Outlook calendar.
Yeah. Mike Canyon, I think that's the key. Teams is amazing internal.
Yes.
It's clunky as F for meetings outside the organization. I 100% agree. I 100% agree.
Mike, you hit the nail on the head.
Yeah. Maybe that's why my experience with Teams is so bad, because anytime my interaction with Teams has happened, it's because it's a connection to outside my organization. Half the time my mic doesn't work, so I have to connect in via the phone, and I have to it's not like synced correctly, right? Whereas with my WebEx or Zoom, it's literally just connected to either the same mic, or I can just, have it call my phone and connect through that. And it's so easy.
Yeah, so Zoom, interesting. They're definitely not going away. It looks like forward growth going forward. They do have a large backlog. They're trying to make a big play into phones, which becomes sticky. I can tell you, and I'm sure Chris has gone through changing systems. It's a bitch to change phone systems. It really is. Yeah, and once you get on a network for so long, it just becomes sticky and people don't want to leave. So
Yeah.
I could see Zoom being an interesting play.
Yeah, man. I'm telling you, it's let me just show you on a quarterly basis, because once you see it on a quarterly basis, you'll be like, oh, wait a second. This actually kind of makes sense. This is their growth on a quarterly basis. You see that nice upward revision?
Yep.
See, this is not a dying business, man.
No.
And especially because that Anthropic ownership right here, that's the part that really, it's like a call option on Anthropic that people don't necessarily realize. Zoom, Anthropic value.
So I do want to get your opinion about what
here.
our Secretary of War and President Trump said about Anthropic.
Yeah, about like they're basically get ripped out of the thing.
Mm-hmm.
Yeah. So right here, well, before we do that, Zoom's initial investment was 51 million. Analyst estimate in 2026, it could be worth between 2 and 4 billion, with potential to exceed 5 billion. They haven't sold a share, by the way, following a massive growth in And so
51 to 5 billion, everyone. I mean, that's 100x.
Yeah.
100x, not 10x. 10x would be 510 million. 100x.
Yeah. Yep. So right here, beyond the financial results, investment secures Anthropic cloud models for this. Yeah. So the valuation before was about 180 billion. So if you think about it, that $2 to $4 billion valuation could theoretically be the entire market cap of Zoom at one point. You remember what happened with Yahoo and Alibaba? We could see a very similar. We could see a very similar thing where people are not necessarily like, they're like Zoom, but you got literally $2 billion of. And by the way, people are saying EBITDA is a magical number. You can make up EBITDA, but you can't make up free cash flow. Free cash flow on an annualized basis. Look at that, 1.9 billion. Tell me where you're going to get that 1.9 billion in free cash flow.
You can't make that up.
Yeah. So the key here is when you combine share buybacks, you combine RPO growth, you combine valuation at a low amount, considering 30 to 40% of it is in just short-term cash and that no debt on the balance sheet. I don't see a bear case for this. I'm not saying this thing is like the next big thing, but if you want to get exposure to Anthropic and you want to get it with a company that's actually growing and making money, Zoom may not be a bad place to hide out. Especially if Anthropic's.
That's not a bad way of looking at it, where you may be onto something right there, Chris. I'm going to give you a lot of credit because I have not heard that angle from anybody yet. And it's actually genius because the long-term investments are at 1.5. If this becomes 5 billion, you add 3 billion in equity overnight to the balance sheet.
Yeah.
On a company that is doing 1.9 billion in free cash flow, buying back shares, and is growing EPS steadily, even if it's low single digit. It's actually genius.
Yeah, and like I said, if Anthropic's valuation hits $1 trillion, bro, your $2 billion right now just gets turned into almost 10.
It's incredible.
With no debt.
With no debt.
Like I said, and they have growing RPO. So if they were a dying business, the RPO numbers would be in the other direction. So
Correct.
there you go. So it's about 10% yield on the buybacks, right? They've got SBC, of course, but the SBC, as I showed you, is on the decline now as old things come off. They've got an avenue for shareholder value return over a long period of time.
Yeah. So I'm going to go through the deck. I'm going to go through Zoom a little bit more closely. This is now more interesting that Chris framed it this way to me.
Yeah.
We'll see.
Chris is grifting. Dude, there's so many things that are worth grifting. Zoom is the worst grifting stock that you could think of. I mean, if you want a grifting stock, grifting stocks usually lose money. They're not trading at single digit PEs. You know,
Chris, I got something for you that I believe we can potentially do well on. Something we've done well on in the past.
Okay, go for it. Verizon? Are we gonna do Verizon?
No, we've already done well on that for a second time around.
Yeah.
What else?
That was good. That was good.
What
that
else
was
have we done good on when everybody thought we were crazy? There's one particular company nobody wanted to touch.
What? I don't know. You tell me, man.
We made a lot on it, Chris.
SL Green?
I'm telling you, have you seen where it is?
Oh my God, SL Green. I can't believe. Let's go back to our.
It's at 36. All right, 37.50.
Oh, dude, they're back down again?
Now, this is what I'm going to say. I went through the quarter, okay?
Yeah.
They're guiding, if I remember correctly, for 94 plus % occupancy by the end of 2026. Now, I think people are worried about how much commercial real estate taxes are going to go up in the city. Here's my theory.
Mm-hmm.
This is just going to be short term. These headwinds will be short term. I don't think SL Green's going anywhere. They are the number one landlord in New York City. And I was thinking about it again this morning, driving over the 59th Street Bridge, just looking at the city. Give me a little bit of rope what I'm about to say.
I'm listening.
Most people are not leaving New York. We live in an echo chamber if we're on X, where sure, the billionaires are able to leave California and they're able to leave New York. Sure, okay, I'll give you that. But the amount of people in New York, they're not leaving, okay? When you think about the real estate that SL Green owns and operates, they're not losing businesses. They're expecting more occupancy rate this year. And while the super affluent may leave for tax reasons, that's not the reality for probably 99.6 to 8% of New Yorkers. And the city is always going to be the city. Yeah. We're always going to have businesses here. It's always going to be a financial hub. Whether Miami gets grown out or not further, New York will always be a financial hub. Maybe it won't be the financial hub in 10 to 20 years, but it'll always be a financial hub. It'll always be a major city because it's New York City. So I think from a long-term perspective, SL Green is looking really interesting. You had two things go wrong. You had the casino bid not go their way, and you have uncertainty in what tax policy is going to be. But I think all that's priced in right now.
Yeah, maybe. I have to look into their liabilities. That's like the biggest thing with me because this thing has always had rental revenues. I'll have to go through this entire thing. Their interest expenses. Wait. This is 12 months. Let's see, interest expense about 1.8. So depreciation. So the thing when you're investing in REITs, guys, like not REITs, commercial real estate, whatever, even though everyone looks at like the EPS, right?
Yeah,
like, oh my God, earnings per share.
Operations. There's a lot to go through.
This is the thing that you really look for, funds from operation, because what this does is this includes depreciation. And so sometimes what happens is from a tax perspective, if you're able to depreciate more than you're bringing in, that means that now you don't have to pay taxes on it, which is valuable to you because you can take that cash and use it towards something else. So right now, last year, they generated about $8 in funds from operation. This year, it's $5.88. So this is not good. It's going down, but
I want you to listen to this quote from Mark Holland.
okay.
I think 2026 is setting up to be quite an amazing year for the commercial office sector in terms of occupancy gains, rental achievement, and business growth. He highlighted robust business activity, citing, quote, the big five banks just reported increase to earnings year over year with profits in the fourth quarter up 6.7% and investment banking revenues up 12.6%. Holiday detailed a recent 10-day trip to Asia, reporting unprecedented global appetite for New York real estate. The appetite to invest in New York was as strong as I have ever seen. Now, sure, he may just say that, but they're not going to come out and say that they're reiterating confidence in the company's leasing trajectory, setting a 2026 same-store occupancy objective of 94.8% by year end. Quote from their CFO, it translates into significant same-store NOI growth, 3.5 to 4.5% over the course of the year. In the financial results, in Q4, SL Green closed nearly 800,000 square feet of Manhattan office leasing in the quarter, totaling 2.6 million square feet for the year, and achieved sector-leading occupancy. And this is one last quote. Including the same-store leases that were signed after January 1st in our December occupancy, we would have been at 93.2%. So he's already saying that when they reported earnings halfway through Q1, when they reported Q4, they were already at 93.2%. That makes me think funds from operations and adjusted EBITDA is going to scale.
I mean, I would probably buy the preferreds for these guys, but I'm not sure I'd be very happy with the let me see, with the common equity.
Look,
let me see.
New York real estate, do me a favor, after you're done with that, bring up a max chart going back to the 2000s. I mean, this is a company that has been a leader in New York commercial real estate for a very long time. We have the data about what happened after 9/11, what happened in the financial crisis. We have all that data. What happened during the pandemic and what's happening now. I mean, if this is a company that can come back after the financial crisis and roll back to 150, do I think this can get back to 60 or 70 in a year or two? Probably. I don't know. It's interesting. When you actually go through their presentation, you look at their real estate, you look at their occupancy rates, it's interesting.
I don't know, bro. I don't think this is as interesting as you're making it out.
Interesting.
But I'll look. Why not? Because I'm not a fan of buying into things that are on the decline, man. I mean, you're talking about getting deep value at that point.
I mean, it's down 50%. It was at 67. Now it's at 35. Sorry, 47% or so. Like, this is where I'm like, you know what? I think we're finding a floor. And I don't think this going back to 50, anybody bats an eye.
Have they done any divestitures lately?
I haven't gone through everything, so I can't answer that. I'm not 100% sure.
Okay.
I don't know.
All right, whatever.
Maybe I'm a little too close to it because I walk past One Vandy all the time and I just know their real estate assets. I mean, I want to show everybody this real quick. When you and Chris knows a lot of the stuff I'm going to show is what has been in New York for a long time. Here we go. I mean, they have the crown jewels of real estate. I mean, One Vandy's amazing. I mean, I don't know that you really go wrong with some of this stuff. So
The problem is that the problem isn't the assets. The problem is the debt. That's my
I get
biggest
it.
challenge.
I mean,
You know?
these assets are world-class assets. World-class.
No, I look, I'm not disagreeing with you. I am all for it, man. But once again, my biggest problem is the debt on the balance sheet, especially if we get a higher for longer situation. Like, how much of their debt is floating rate?
We can ask ChatGPT. I don't know off the top of my head. But if we listen, I think we're getting 4 cuts this year. Now, I could be wrong. But I've been saying 3 to 4, and I'm leaning more toward 4. If we really do get 3 or 4 this year and 2 next year, this thing is going to look a lot different. And the short interest is almost at 15%. I don't know why the short interest is at 15%. This company, it's going to be really hard for this company to go under if it didn't go under during the financial crisis.
Yeah, the other thing I'd worry about, though, be honest, is mark to market on their buildings too, because there's a lot of real estate. You know, their market, they'll say like, "Oh yeah, this is worth 500 million, blah blah blah." But the minute that you actually try to sell it, maybe you get 30, 40 cents on the dollar if the occupancy is less than 75, 80%, especially if it's like an older building. So if that's sitting in their portfolio, like you'd literally for SL Green at this point, in my opinion, and this is just me saying this, Steve, you'd probably have to go through every building one at a time to see what the occupancy levels are, what the actual market value of this thing could be in a liquidation scenario. And if SL Green had to hand back the keys, they'd have to do markdowns, then they'd have to do write downs. And I'm not so sure how that would end up with these guys. I was very hopeful.
I think they've done some dispositions because I'm looking at the book value and tangible book. It has gone down, but this is selling at a 28% or so discount to tangible book, not book, tangible. Tangible book is 46.49. This is where we made money last time because it was selling at a discount to tangible book.
Yeah. I'll do more research. I'll see. There was a couple of things that really helped them out when we bought them. If you remember that guy that bought that building?
Yeah, the Japanese fund, yes.
Yeah, that was one. There was another thing that they owned the land underneath. I forgot the asset.
It was the one on Park Avenue. I know exactly.
Ashkenazi. They basically screwed Ashkenazi, that guy. You remember that?
Yes.
They got a sweetheart of a deal. And the other thing is SL Green was hooked up with Eric
Adams administration.
Yeah. So I don't know about this Mamdani situation, how that's going to be. So I don't know. Like I said, I'd probably do a debt analysis and I'd try to figure out the mark to market on most of their buildings because I don't trust them to mark to market correctly. It just wouldn't be in their interest. And then, like I said, if they have to hand back keys and all this other stuff, then you got a problem. So I believe that Class A buildings will do just fine, but you'd have to look at their portfolio to see like how much of their portfolio is Class A and how much it's Class B and C. And even if some of their buildings could be converted to residential, I mean, Steve, I told my wife at some point I want to come back to New York and live in a townhouse. I want to buy a townhouse in the city. I'm not talking about like.
I know exactly what you're talking about. I know what you're talking about.
I want to actually, but not until I'm probably like in the 8-figure range or something like that. Then,
well, you know the best part about living in New York City is when you're older.
What?
The healthcare is first class.
Mm-hmm.
The healthcare is first class. You have the most doctors, the most great hospitals within a very short range. You have the restaurants. You don't need a car. It's very easy to get around. It's made for
JFK. You got JFK right there.
LaGuardia on the other side.
That's why, like I was telling Amit, the amount of money that he's paying to live in Jersey and the amount of times he's just back and forthing it between the city, you might as well just get a place in Manhattan. You know, he doesn't have to buy a townhouse. But I'm like, listen, if you got the money, dude, that is a great place to buy an asset that over a long period of time is always going to appreciate.
Yeah, he wanted to live where he wanted to live. I respect
Yeah.
that. I said my piece once, and that's all.
Even there's even some co-ops too that like you could buy in the city, like that have kind of like this. I saw a couple of it was like a doctor's office in a co-op,
They're
but
usually on the first floor.
yeah, but it was a first floor thing. And I'm like, dude, you could just convert this to a studio and this would be perfect for any of your guests that would come, that like, I know because you guys are doing your thing now. And I'm like, you could just convert this into like a nice professional studio. Like I said, if I still lived in New York, that's what I would do. That's what I would have liked to do. But I'm an Atlanta guy now. I love it down here.
Well, I'll tell
So
you, Tudor City is, I
mhm,
think, the most underrated place. Apartments are
mhm.
cheap.
Yeah.
It's beautiful, and it's secluded, and it overlooks the freaking East River.
Yeah, but the problem is Tudor City doesn't have a lot of places. I mean, most of it's owned by that Blackstone, I think, right?
I'm actually not sure if a lot of them are rentals or not. It's just I walk over there a lot. It's beautiful.
Mhm.
And Long
Yeah.
Island City, I remember the days when it was just the Citibank and the other building that looked like it. There, the skyline is in Long Island City looks like Brooklyn now. It's crazy.
Yeah.
So a lot of people are asking about VG. What do you think?
I think venture global in the short term has some good catalyst behind it with this whole situation with with the Strait of Hormuz situation and Qatar. The only thing is if this thing gets resolved, then you could see VG. It probably won't get to that $5 ever again, but then again, you never know. Especially if they have a terrible ruling when it comes to their BP arbitration issue. But today, Chevron, their appeal got rejected. So, it's like VG is a great place to be long term, but a lot of their production, especially their debt level, is very high. So what happens is as the company slowly pays down the debt, it's going to bring more value to equity holders, right? Now, the challenge that you run into with VG is that a lot of the contracts that they have right now are spot, and so you're pretty much at the mercy of the spot market. So if let's say the price of Henry Hub goes up and TTF goes down, then now all of a sudden you're sort of in a bad place because now you're not operating nearly as profitably as you were if the other scenario happened, which is Henry Hub actually goes down and TTF goes up. Um, Over a long period of time, these guys they are taking a lot of market share from not necessarily market share from other liquefiers, but essentially they're the low cost provider of liquefactions services, and so a lot of other competitors they're kind of just putting their hands on the air and saying we don't want to proceed because we can't compete against these guys because that's just how efficient they are with doing everything. Now, that, in my opinion, is good if you're trying to gain as much market share as possible, but it's not so good in terms of total return potential. So, I think over a long period of time, these guys are really trying to be the volume gas producers for the United States. And according to them, they're going to do about 180 MTPA, which is insane if you think about like just how much natural gas that is. But yeah, so I think VG has a nice upward trajectory. But I will say this, if the trajectory goes too far up too quickly, it's not a bad idea to take some profits and probably sell some puts along the way and just go back down. Because I do think that this thing should be range bound for at least a couple of more years between 10 and 20. Because they do have almost 4 billion shares outstanding.
Okay. Um, I I gotta tell you, I can't say enough good things about Claude, and I do want to talk about Anthropic to finish this out. Look at what it did. So I asked it to run a debt analysis on SLG. It built out a full one with mark to market, maturity profile, and debt detail. Now I have not, and it went building by building. So I have not validated this, but the fact that it did all this and I saw what it sourced the most recent stuff,
Yeah.
this is pretty damn impressive.
Yeah.
And this is the worst that AI is ever going to be. I don't know that we're bullish enough, to be honest.
Yeah. I mean, to be fair, I think we really need to get extra long on anything Anthropic and OpenAI and Gemini. I think those are the three main winners. Right now, ChatGPT has a first mover advantage, but Anthropic is really, really coming up. Like,
so how do you
fast.
feel about what they said? Do you think this is just posturing, or do you think they're actually going to rip this out of everything in the government?
I don't really care, man. I mean, at the end of the day, if you think about it, Anthropic was going to do well regardless whether or not they have the federal government. If anything, if the Trump administration leaves in 2 years, who gives a shit? You know what I mean? It's
So I do want to show something.
Mhm.
After this is done coding this, one of my friends asked me to build something out for her daughter about looking for colleges. And I
Mhm.
ran it in Gemini, I ran it in ChatGPT, and I have the pro version of Gemini, I have the pro version of ChatGPT, and I have
Mhm.
the enterprise version of Claude in full disclosure. Okay, I'm not
Yeah.
using the free versions. What
Yeah.
Claude Opus threw out versus the other two
Mhm.
made the other two look like it was JV versus college, not even varsity. It was wild.
Just do me a favor, be careful. It looks really nice, but I caught it more than a few times making some mistakes that had I not known the company that I was invested in, I would have said, "Oh yeah, this is not right. You know, this is fine." But I'm telling you, there are times where you really have to audit this thing. So,
Oh
just
yeah, and
FYI.
that's why I whatchamacallit, um said I need to validate the numbers. So I'm gonna go to the chats and I'm gonna share what Claude did. Um all right. Why doesn't it want to come up now? There we go. So the they wanted to know explanation of what direct admin BSN means and why it matters, city versus traditional campus breakdown, a bunch of different stuff. And Claude built out a full, I mean, really in-depth thing. Full GPAs, Big Ten, ACC, um, detailed profiles on the schools. I mean, I thought it was
Nice.
very impressive compared to the recommendations and strategy, best for abroad, application timeline tips. That it basically answered everything. And
Yeah.
now this is what the other ones threw out. So freaking Gemini wouldn't even dump it into a freaking file.
Yeah.
I had a control copy. It wouldn't throw it into a doc. I mean, it was not nearly as comprehensive.
Yeah.
I mean, that was it. Was not nearly as comprehensive. And OpenAI did turn it into a doc for me. I need to open it. Give me one sec. Um, and this is from ChatGPT OpenAI. Definitely better than Gemini. I need to go
Mhm.
through all the data. It's similar to what Claude spit out, and it gave you all the sources.
You can integrate Claude into your Microsoft thing too, right?
I know. I'm actually, they just came out with all the classes. I'm thinking about taking all the free classes on Claude.
Yeah. Yeah. I'm thinking about possibly doing a similar thing.
Yeah, I need to learn how to use Claude Code, and I think I'm going to take the classes.
Yeah. some discounts at Banana Republic. Let's see. Yeah, I don't know. What was the topic that we were supposed to talk about today before I went into the Zoom tangent?
We were going to talk about oil, but we don't need to. Anthropic's the last thing. I don't think Anthropic's going to be a loser by any means. If the government does end up pulling them, I don't think businesses will. And I don't think that private citizens will. It's going to be whichever company is making the best models and the best output with the highest accuracy that will ultimately win. And right now, I think that I use all four. And I can tell you that I use Claude for building stuff. I use ChatGPT for hard research. And I use Gemini to make my thumbnails.
Okay.
I don't really use Grok. I just have it because of the upgraded X account.
So basically, you have all the LLMs.
I have every single one. Yes.
Yeah.
I don't have.
Yeah, I have Claude and I have Gemini. I got rid of my OpenAI. I think I might get rid of Gemini because I have found Claude to be like the. You know what? I might just keep Gemini.
I can't get rid of Gemini because I have it in the Google One, and I need the extra space on my Google Drive. So I'm paying $20 a month no matter what for it.
Yeah. Yeah. I might as well. All right, brother. Well, I think we're
all right, everyone. Well, we're gonna call it. Hopefully, we entertained everybody for a while. And
look into Zoom. Look into Zoom.
I'm gonna look into Zoom. I'm gonna look into Zoom, and we'll be back next week. Please go. You guys doing Cash Flow Chronicles tomorrow night?
Probably, yeah.
All right. So check them out either Tuesday or Thursday. They'll be doing Cash Flow Chronicles. Matt and Chris. Check out Chris's X. And a new Basis Points will be coming out this week, I believe on Friday. Super excited. Yeah. It'll be interesting.
Someone said, do you like Fiscal AI? Yeah, I love Fiscal AI. It's good.
Everybody loves Fiscal AI except for Steve.
Yeah.
Don't be like me. Be like Chris. Fiscal AI. I mean, definitely makes your life easier. There's no question about that.
Yeah. Okay, so they actually do have it in strategic investments. Look.
Bring it up. We'll end on this. Where is it?
Here, look. That's so green, sorry.
NYC is gross. I hate having to go there. I mean, I guess it depends where you're going in NYC. If you're in Midtown, Midtown's not gross.
No, someone had it on X. I just saw it. 1 second. See, look right here. So someone does have it. Now, what's it called? Strategic Investments, Zoom Communications. So you see this right here.
Yes.
So it's not like people haven't figured it out. Some people have figured it out that hold on. I saw a really cool thing that someone posted right here. SK Telecom, 12% of the enterprise value is Zoom. I mean, it's not Zoom, Anthropic. Zoom is about 16%. And this is This was before. So the market cap right now of Zoom is, I think, 20 billion. What's the market cap? 21 billion. So it's probably more now. It's almost 20%, maybe more.
Interesting.
And the other portion is cash. It's like, come on, man. Come on.
I mean, 35-40% of the company's cash. You don't freaking look past that.
Yeah. I have the pro version, Alex. I like it. It's got a lot of good stuff. Did you take a course from that? No. Fiscal AI. Fiscal AI is easy to learn. Yeah. All right. I think that's about it. I think we can go.
All right, everybody.
Yeah.
Thank you very much. Really appreciate everybody being here. We'll be back next week. See everyone later. Have a great night.
Maybe we change the name. Change it to Trash Can Weekly. Dumpster Dive.
I'm down
Dumpster Dive. Dumpster
Diving Weekly. I like that. I actually love that. I'll freaking get in your. I'll make a freaking thumbnail of us in New York City in a dumpster.
I'd
Oh,
love to
God.
do this. Maybe a cartoon raccoon. Yeah.
Yes.
Raccoons.
We're changing the name for next week.
All
right, everyone.
Dumpster Dive Weekly out.
Have a great night.
Take
Over
care.
and out.